Welcome back, and we're joined in studio now by Mayur Patel, President and Fund Manager, Listed Equity at 361 Asset, joining us this afternoon. Mayur, we were just chatting just before, we got out of the commercial. You seem to be positive with regard to Indian equities now, but as is most people right now, the consensus seems to be turning now towards the positive side. Give us your sense. Is it flows that's keeping you positive? Is it earnings? What is it that's keeping you constructive?
Yeah, I'm quite bullish on the market at this point. And let me start with two things. I'm calling out two things. First, foreign inflows in our markets should pick up significantly as rupee stabilizes. And second is the corporate earnings. Corporate earnings specifically across the broader 500 universe should witness a strong earnings upgrade as we move into the second half, right? So in the near term, the big catalyst is the liquidity surge happening from the FCNRB. But after that, as West Asia conflict ends, you should see crude settling somewhere around $70, and consumer discretionary demand, CV cycle, and private capex should pick up significantly. So with Nifty at 3 times price to book, which is clearly below the 20-year median, the setup is clearly hinting towards a comprehensive rally as we move into the second half.
Where will upgrades be the most, Mayur? Because that's really the key question. If we can understand as to where earnings will surprise the best versus consensus, that could well be the answer.
So FY26 was a clear example. If you look at FY26, Nifty earnings grew by 7 to 8%. But if you look at the broader 500 companies, the earnings growth was significantly higher than the Nifty earnings growth. So the bigger story is beyond the Nifty companies. So I think while Nifty is likely to deliver 13-14% growth this year, the small and mid caps are positioned to deliver much stronger earnings growth. And even you will see more earnings upgrades, whether it's industrial, consumer discretionary, certain pockets of private capex, renewables. These are some of the areas where we are sensing earnings upgrade cycle.
In fact, renewables, we've seen the multiples compress as well. Could that be something which could really stand out? Because if earnings were a surprise on the upside and multiples have compressed, then that could be a pocket which could well be on its way.
Absolutely. If you look at the equipment suppliers or equipment manufacturers in the renewable space, the valuation multiples are reasonable, while they are on a very high growth earnings trajectory. When this Make in India is progressing well, right from module to cell manufacturing, going forward we'll be entering 100% Make in India wafer manufacturing. And there's a long earnings growth cycle, right? So with this kind of backward integration happening in the country, I think some of the leading renewable manufacturers or equipment manufacturers having good execution skills are available at good valuations. So again, no recommendations on any specific stocks, but this is on the sector. I think there is a long runway for growth.
And private sector capex, how do you suggest an investor plays that? Because there's L&T which came out with positive commentary. There's banks who have said wholesale lending has picked up in a significant fashion. Credit growth looks strong. All of that points towards a capex cycle picking up. Could this be multi-year? Because some of the valuations in some of these pockets aren't exactly comfortable, right?
Yeah, so it's early days for private capex, but we are seeing very strong signals. And if you look beyond the big pockets of capex which are happening currently from the big conglomerates, you try to plot where the future capex will come. Get into the granular details. That's where you'll see that there's a long list of corporates, mid and small, companies having more than $1 billion of capex planned. Some of the companies were really small a few years back, now planning $1 billion, $2 billion capex, right? That's across cables and wires, renewables, power T&D. There are a lot of small companies in the defense space which have got real opportunity to scale up. So again, manufacturing is India's growth story for next 10 years, right? And the Make in India is progressing well. The next phase would be design in India, right? And for that, we need to see a strong scale up in R&D. Then only we'll be able to achieve that ambitious 25% goal, right? So we are playing this theme through equipment suppliers in renewables, power T&D, electronics, data centers, and things like that. So instead of owning asset owners, we are playing through the equipment manufacturers of these things.
Got it. And what about the traditional old school sectors? IT, financials. How are you positioning yourself, or how are you recommending your clients to position themselves on those?
So in our portfolios, we are overweight on financials. We like private banks and NBFCs to play the uptick in credit growth, which has already bounced from 9% to 16, 17% levels. And with rising liquidity is likely to pick up more. With stable asset quality and margin pressures are behind. So we like financials. We like telecom as a value segment. There are a very clear earnings growth catalyst. And other old school, you mentioned, we like consumer discretionary and industrial. Industrial we already covered, but consumer discretionary witnessed a quick uptick, and then because of this West Asia conflict, we have seen a bit of a pause. But I think as we move beyond that, again, you will see pickup in CV cycle, in consumer discretionary, and some of the other pockets.
Okay. And what about IT in particular? How are you looking at this entire AI transition of sorts, which IT is going through? Are you positive at the end of this?
So currently, we are underweight on IT, and that's clearly helping. But I think the large IT services companies have to transform themselves on an urgent basis, right? So if you look at, I break the AI story into layers, you will have one layer for integration of AI, then you have a middle layer of LLM, and then you have a hardware layer. So we have a big story in the hardware layer side, which is picking up early stage, the data center story. On the top layer is where the large, leading IT services companies have to transform themselves and create a niche to benefit out of that opportunity.
Okay. And just in terms of the earnings momentum, you said that mid and small could well be the play with regard to earnings momentum, because momentum there is far stronger. Do you believe that the opportunities will come for some of these smaller companies to become larger in the traditional spaces? The banks, the NBFCs, would the smaller ones benefit disproportionately in terms of the current cycle next 2 to 3 years?
It's going to be very bottom up. So traditional segments, there are enough growth levers. Like I mentioned, manufacturing is the core growth story, and there are many traditional sectors around that. And obviously, there are many niche emerging sectors around semiconductors, around, like you mentioned, AI. There are quite a few small pockets of AI beneficiaries and things like that. Consumer tech is another area where we are seeing strong growth pickup. We have already seen a strong scale up in quick commerce as a subsegment, but there are quite a few more segments. So I would say it has to be a bottom up approach to identify scalable opportunities in the small cap space.
Okay. And last off, Mayur, anything that you're absolutely avoiding? I think IT, you're a bit cautious, but outside of that, you said you're positive on defense. What about some of the larger defense players? How are those looking?
No, so I am positive on the manufacturing as a theme. Currently, we have a larger allocation towards, say, renewables and power T&D and things like that. But defense is one of the beneficiaries of this theme, right? So one has to be very bottom up, and at right risk reward pick up stocks. So that's the thought process currently.
All right. Thank you so much, Mayur, for coming in and speaking to us. This has been insightful. Thank you.
Thank you.
All right.